What's up, YouTube? In this video, we're going to go over Microsoft, ticker symbol MSFT. Year to date, company's up 37.6%. Over the course of 1 year is up 45.5%. So Microsoft last week reported its Q1 earnings and beat revenues by about $2 billion and beat on the EPS side of things by 34 cents per share. Pretty solid earnings on Microsoft. One of the most important things I think out of the entire article, mostly the summary that I went through on Microsoft was their search engine. And obviously, the cloud was a big deal. A lot of investors were paying close attention to how the cloud was going to do. Which is fine. It did good, but I think this is going to be a game changer for Microsoft in the future. Is going to be its integrated AI's technology into nearly all of its product, including the Bing search engine. And that was the other thing that we noticed in the earnings release was that its search engine did fantastic compared to Google's. And that's one of the big reasons why Google is actually down, is because people weren't using Google's search engine as much as they were Bing. Bing was taking the lead in terms of the search engine. So you can come over to here as to why I think maybe why is up in the right hand corner. They've got this little icon. You click on it, and this is your AI. So you can ask this AI anything you want. And I asked it right here. I said, okay, when does Copilot's release date? And it gave me for enterprise customers November 1st, so next week. So I think that's going to be this is going to be huge for this company, because the Copilot, if you don't know anything about it, you should I would highly recommend looking into it and seeing what it's capable of. And I think it's going to be a powerful tool, especially across most of, if not all of its products. And on the Bing search engine, I use this all the time, on almost daily, if not several times a day. So on the earnings release on their 10Q, they have been buying back shares, and in the first quarter, they have bought back about 11 million shares in the amount of $3.5 billion, and they bought back at an average price of $323 per share. Last year they bought back 17 million shares for a total of $4.6 billion, and for an average price of $270 per share. So now they're buying shares about $50 more expensive than where they were last year. Not necessarily a bad thing, but definitely something that could tell you, I wouldn't think that Microsoft is buying back expensive shares. They could be, but I think that kind of maybe gives you an idea that Microsoft thinks its company is worth at least that, or maybe it doesn't see itself being worth less in the future, which is why they're buying back so many shares right now. And we can see up here in the retained earnings, Microsoft's got $132 billion of retained earnings, and it's been using its retained earnings to buy back shares and paying out dividends. So it's got plenty of cash, and it's obviously grown year over year by $40 billion of retained earnings. So they've got plenty of cash to continue buying back expensive shares if they are, and also continue paying out dividends and possibly dividend increases in the future. Over here on the financials, come over here, we got our charts on the right hand side of the screen. We've got revenue, gross profit, net income, all three trending higher. Net income leveled off there for a second, but is starting to tick up back higher. Gross margin sitting at 69.4%. It's the highest it has ever been, at least in the chart of what we can see. Net margin sitting at 35.3%, pretty close to all-time highs on net margins as well. Revenue, gross profit, we have seen a bit of a slowdown within the company, but I believe we are going to start seeing that tick back up once Copilot releases. Return on invested capital, pretty decent, 23.8%, has been better, but hopefully it starts to level off and maintain around 25 to 30% return on invested capital. PE ratio currently telling us potentially richly valued, sitting at 31.93, kind of high, up on the higher end of where it normally sits. Cash to short-term debt, they got more cash than short-term debt, so that's good. Cash to total debt, they do have a lot more total liabilities than they do current cash. Net income to free cash flow, we have more net income than free cash flow, and just fantastic growth rate on the free cash flow side of things. And we can see here how our growth has been. Currently haven't hit all-time highs in 2022, but still leveling off around $64 billion per year in free cash flow. Very good. Share count dilution, we are slowly getting rid of shares and making our shares worth more. Dividend is growing nicely. Capital expenditures still, those are also growing kind of at a quick rate. Hopefully these can start to level off a little bit, and then just maybe maintain $30-ish billion in CapEx. Maybe they can even shrink them up a little bit. but we'll have to wait and see. But overall, financials on this company look fantastic. So we got three other companies here that I chose to compare to Microsoft with. And again, these aren't exact comparables. These are obviously all have different business segments, but obviously have some competitiveness within one another. Revenue, gross profit, net income across the board here. Again, these companies obviously do different things. We are all very well aware what Amazon and Apple does, but Oracle is basically just a cloud business, but cloud is also tied in with Amazon. We could probably also throw Google on this list as well. Google is probably another comparable that we could throw on there. So we add that one in there too, and then we can kind of see, you Google, Oracle, and Microsoft are probably the closest comparables, but Microsoft and Apple also, so it's kind of tough on this one just because there's not exact comparable to Microsoft because obviously there's so many other separate business segments within each one of these businesses that we're looking at. So come over here to Peter Lynch valuation. We have Microsoft gives them Peter Lynch value of $164.89. Multiples comparison, of course, the four companies we just kind of talked about, sort of that, that we're kind of comparing to, gives Microsoft a $387 price tag, which actually seems to be relatively in line with where everything else is coming in for price tags. Manual PE, we got our market cap minus cash, add in debt, divided by cash from operations. It'll take us about 26.6 years to earn our current market cap, which tells us we are overvalued. Price to book, 5-year average 12.4, currently at 11.1. Peg ratio, forward looking, is telling us we're about fairly valued, but currently sitting slightly overvalued. Graham's valuation gives the Microsoft intrinsic value of $358 per share. Dividend discount model on Microsoft sitting at $341.27. Discounted cash flow valuation. Analysts had a growth rate of 7%. They have a history of 13%. I think Microsoft's going to do very good in the coming couple of years, potentially with its Copilot release. I think that's just going to generate so much more revenue and increase their cash flows exponentially. So I gave them 10%, kind of between where analysts were and where their average growth rate is. And that gives them a DCF price per share of $486.52. Down here at Rule 72, we have EPS growth rate average of 13.42. And there's three different sources for EPS growth rate there. 13.42 goes into 72 5 times. That goes into 10 years, almost 2 times. So we get to double our current EPS 2 times. So I gave them a future EPS of 41, which is a fair value of $275 per share. For the summary on Microsoft, currently trading at $329.81. We got a fair market value of $335.47. 30% margin safety, $234.83. Analyst price target on the company to $387.18. So I'm going to drop a link to a previous Microsoft video that we did maybe a month ago that includes Copilot's revenues potentially in there for an estimate, and it tells us how much Microsoft could be worth in the future. So I'll drop a link to that video right now. I would highly check that one out. That was pretty eye-opening. Over here onto the stock chart. So last week when Microsoft reported earnings, it gapped up, pushed up through resistance, actually kind of hit its head on resistance and got shoved back down and now is right back where it was, or about in line where it was before earnings. So depending on what the market does this upcoming week, we'll have to see where Microsoft ends up. But I think Microsoft's doing a pretty decent job holding up, but I think it might pull back. Maybe it pulls back to about 310. It'd be fantastic if this thing pulls back to about $280 per share. I mean, that's what you call one of those back the truck up moments or whatever. Sell the car, sell the dog, sell the house, and then buy as much Microsoft as you can at the $280 range and ride this thing back up, and then buy yourself a bigger house once that thing runs itself up to $400+ per share. So that's really it on Microsoft. This one for me is a very, very interesting play going forward. I'm very excited for what Copilot can do for this company. But that is it for Microsoft. If you found value in this video, drop a like, subscribe, and comment. We'll be back later with another stock analysis video.